Hi there everyone, good morning. This is the market. I'm Avan Dabash, with me Nikunj Dalmia as well as Anisha Jain, and we've got a decent handover coming in from Wall Street, and as we're training our eyes as to what the inflation print could be over there back home as well, you have the CPI data which is clearly taking a center stage. 6.5% versus estimates of 6%, which is what the street was penciling in, and now we're looking as to what all eyes be really being trained, Nikunj, as to what the CPI print overseas could be.
Yeah, I mean, the last thing you thought that we would be discussing here, inflation and inflation as the top talking point on Tuesday morning, but inflation locally has gone higher. Globally, the US market, in a sense, we know that is that the CPI inflation globally is an important component. Now, the bad news here is that the CPI inflation data, which is inflation data, which came yesterday, was above estimate. That means in the near term, just when it appeared that inflation was peaking out, now suddenly there is a case for another rate hike in the month of April. It's not disturbing, but it will make the market assumptions and projections slightly different than what they were, let's say, at the beginning of Jan. So this surely will have an impact in terms of how the bond market and how the macros in the market would move. I don't think this is going to be leading to some kind of an selling stampede, so to speak, and Nifty is going to break down and individuals, stocks will adjust sharply. No, that's not going to happen. But the fact that inflation has come back just when it appeared that things were moving in the right direction on the macro front will obviously have its extra dimension of volatility in the market. Now, very quickly, inflation is higher because of seasonality. Once the seasonality effect fades away, hopefully numbers will be better. But what this will do is that in the near term, it will start impacting NBFCs as a group, autos as a category, and perhaps some banks which do not have strong CASA.
Well, yes, and bank was the space which was coming under pressure yesterday, right? Specifically, the PSU banking sector was the key laggard in the trading session yesterday. It was overall a tepid day for the Indian markets. We started off on the back foot, and since then, we were trending mostly lower, and it was sectors like media, IT, realty, metals, which were on the back foot as well. And the interesting point yesterday, Nikunj, was the fact that the market breadth deteriorated quite a bit. If you look at the advanced decline ratio, it was firmly in favor of declines, and it was a broad-based sell-off as well. Of course, it's a fag end of earnings, so we're seeing a lot of result reactions as well. But nonetheless, there is a bit of weakness which we're not able to overcome.
No, Anisha, it was, in my book, it was a poor Monday. It was a poor Monday. The breadth was bad. The selling was led by PSU banks, with the exception of a handful of fintech stocks, which are also volatile. The market on Monday did not show any signs of inertia, and the PSU Banking Index, which in a sense was showing signs of making a comeback, that also led the market decline yesterday. Nifty, I think, is clearly in a range, so nothing in terms of the Nifty equation changes, but the breadth of the market, which did show signs of marked improvement. It appeared that market had digested the Adani Group stock fiasco. Yesterday's market weakness is something which is not going to go down very well. So it's getting hard and tough now to trade in this market, and finding stocks and finding spots where you can make smart gains in the short term, I guess, is becoming more like a task now. So it's not an easy market to make money. Individual stocks, handful of them are the only ones, provided you get them right. So it's one of the phases of the market where news is over, the Nifty is stuck in a range, global volatility at best you would say is back, and individual stocks are just not responding to any kind of good news. Look at two stocks yesterday, City Union Bank and Balkrishnan Industries.
Yeah.
Poor set of numbers, and look at the market reaction. I may throw in an info edge here. That's not a good sign. That is just telling you that good news is getting ignored and bank news is getting amplified. So it's getting a task now. Task is the right word. I was looking for that word. It's getting a task now to find really good spots to trade and make money.
Yeah, and we'll wonder what is going to come about today as well in terms of the big numbers that the street is anticipating, Nikunj. And busy day for us. Apollo Hospitals, Eicher Motors, ONGC, and Grasim among the Nifty 50 companies today.
I would say Eicher and ONGC, really from a market standpoint. Grasim is a holding company, and you pretty much know that which way Ultratech would move. From Grasim, you at max may get update in where things would move in terms of the cement expansion business. But iShares is important. Auto is in a good groove. iShares has been a go-to stock for a lot of institutional investors purely because of the margins and the category they represent. So that in a sense becomes a important, stock, so to speak. If you frankly look at iShares, it has done rather okay in comparison with other auto stocks. TVS of course was an outlier, but iShares has done rather okay. That category also has done rather okay. So it's maybe the last of the auto companies which will come out with numbers, but iShares numbers, given the representation they have in the niche category, they have, I think, a good crucial set of numbers.
Okay, and of course, the entire new age tech sector has been in focus as well. Today, of course, the street will react to the numbers coming in from Nykaa, wherein the revenue was up around 18% quarter on quarter. The margin was stable and the profitability jumped up by 64% sequentially. In fact, we spoke about this entire new age tech sector and fintechs as well with Dinshaw Irani, the CIO at Helios India, and he says that both Paytm and Zomato, the two platform companies that they own, have reported stellar Q3 numbers.
The two platform companies that we own, right? And we added once the results came out, and we've been averaging out there as such. And frankly, I mean, both the companies, the results were fantastic. In fact, our feel is that given the potential that India has of the consumer base, in fact, India, if you see the kind of consumers they can appeal to, it's like a whole of Europe put together. That's one single place where these players are working out, and especially in the case of Zomato, I mean, it's a two-player market, and they're on the verge of breaking even. In fact, they have revenue on the EBITDA level, but thanks to the hyperlocal, they're still not Blinkit. They still haven't done that. But our feel is that it's a matter of time before they do that too. And Paytm, you saw that the results were like through the roof. What do you look at a platform, right? I mean, you're looking at the fact that it offers convenience. As you rightly said, that smaller towns may not be the convenience story. And that's why you saw that they moved out of 200 odd towns to 25, if I remember right, the figure. They moved out of those smaller towns as such. And I mean, the top 30 still account for a bulk of, majority of their revenues as such. And our feel is that even there's enough potential to go about milking the consumer, not milking, sorry, the other, giving more convenience to the consumers as such.
The fact that there was no change in the capital gain structure this time, can we assume that this is some kind of an endorsement by the government that equity will get a preferential treatment?
We don't want to keep changing too many things in too few short time. Capital gains tax, the last amendment was probably in 16 or 18?
2018.
18. And subsequent to that, ideally even 3 full years of not even gotten completed. So do you want to change the policy immediately? No, you would want to see how it works out.
All right, now, so it's getting rather difficult to trade. I guess it's obvious the Nifty stuck in a range. Individual stocks are just drifting here and there. Let's connect with our technical experts. Naresh joins us, and along with Naresh, we've got Shilpa Raut. She joins us live to walk us through what we should expect today. Naresh, it's getting a task now to identify trades in this market. Nifty is absolutely stuck in a range, and performing sectors are simply just caving in. For example, PSU banks, or what's happening even in metals now.
So the only thing which props up in terms of a trigger is yesterday we saw a good uptick in the US markets. It has come very close to the breakout point, so that 24,300, 500 is roughly the resistance for Dow Jones. We closed at 34,200 plus yesterday. And today there is inflation data in the US. If that can trigger some move, we can see a similar, say, momentum in Indian markets also. So as of now, the problem is we are not seeing any trending moves across the sectors, even in the heavyweights or even in the broader markets. For example, yesterday it was all about IT stocks also taking a crack out of nowhere. So one day you see IT doing well, one day you see banks doing well, one day you see Reliance doing well, and at the other end everything else does a little drift. But the fact still remains, we are still stuck in this range. We've not broken down out of this range or broken out. So till the time we hold about 17,600, the bias remains positive. It's just the momentum trigger we need above 18,000 marks. So overall, still waiting for the same.
18,600 is critical. Shilpa Raut is well with us. And Shilpa, what's your take on the Nifty Bank Index after yesterday's movement? What we've seen in the last 1 month or so, do you believe that we will continue to linger around these 41,200 levels?
Yeah, definitely. Bank Nifty is having a very strong support base in between 40,500 to 41,000, which is where we are continuously, hovering around, and this is where we will take support lightly, because breaching 40,500 for me would open gates till 39,000 for the index, which I don't see very likely happening, because Nifty is also in that range of 17,700 to 18,000 as of now. So till we are in this range, probably nothing is going to change much for the index.
Okay, yes, that index hasn't been doing much and it's not expected to change course very sharply today as well. That's the word coming in. But let's talk about stocks and which are the ones which can see sharp moves today. Naresh, let me first come to you. Which are your top recommendations?
So continue to have a bullish view on L&T. The stock is clearly showing leadership and not very far away from a 52-week and an all-time high. Expected to make a fresh one going forward. And the whole capital goods segment looks promising. L&T, after the big breakout of 2050 to 2100 has become a support over the last few weeks, and that indicates a relative strength. So out here, bullish on L&T, a stop loss at 2140 and a target price of 2300 plus in the extreme short term. Second is a buy on NTPC. The stock recently was ex-dividend of 4.25 rupees. If you were to look at a dividend adjusted start, the stock is closer to a 3 to 4 week high. And it's on verge of a breakout above that 168, 170 mark. Also, all through the current correction which we had on the lower end in the Nifty, the stock did not even break any of the swing lows. The stock continued to hold on to its support and was down only 2% even when the Nifty took a crack. So clearly showing relative strength and resilience. And now setting up for a breakout move, expecting it to make a new all-time high, a stop loss at 164 and a target price of 190.
Okay, so those are the picks coming in. NTPC as well as L&T, these are the top bets. But Shilpa, what about you? What are you spotting?
Today I have a buy. I have two buys in fact. One is on Glenmark. Glenmark, has a very strong support zone set around 420, 418 zones. So in futures it is traded. It has closed yesterday at 422 something. So for me, a stop loss of 417. One should look for targets of 445. And the second one would be MCX. MCX is trading at around 1400 zones as of now. And in all this choppiness also, it has not breached this very strong support of 1400 to 1380 zones. So with a tight stop loss of 1380 from here, one should look for targets of 1500 and above because the risk reward lies very favorable in this both counters.
Okay, so that's the take coming in as far as the top recommendations are concerned, but it's time now to slip into a very short break. But as we do that, we leave you with this interesting conversation because remember, this is the first time that HAL has unveiled the design of the scale model of the HLFT-42. The aircraft has a unique tail art of the Hindu god Maruti, symbolizing strength, speed and agility. With the tagline, "The storm is coming," Shivan managed to speak with a group captain Harshavardhan Thakur to understand what this next-gen supersonic trainer can really do for India.
A lead-in fighter training requirement has been there for quite some time. The new generation aircraft of tomorrow, like the AMCA, LCA Mark II, TED-BF, etc., are all single-seater aircraft, single-crew aircraft. They have a pilot who needs to be trained elsewhere for being capable of flying them and in combat especially.
Thank you so much.
there is a culture of, there is a possibility of training them on simulators only and then launching them into these aircraft. That kind of training would be very inadequate, inefficient, and it will be very costly because all his training he will be doing alone on a fighter aircraft, which is a very expensive aircraft. So, as a result of that, these high-performance single-seater aircraft require a trainer. That trainer is HLFT-42, which is a very high-performance trainer, perhaps the highest performance in the world, so that it can keep pace with those aircraft and give that environment which fighters actually are exposed to.
So we see a lot of missile systems out here, and we also see an image on the tail. Sir, and everybody wants to ask that why this image on this particular aircraft. So we'll walk that side so that we keep on showing the image also.
So the number one is that we have a number of missiles on this, and that's because this has to be combat ready at all times, has to be available for actual operations at all times. Any trainer which is sitting on the ground is useless when the operations are on, so it will be employed in wartime. As for our inspiration of the graphic on the tail, that's simply because of HL's legacy, and our inspiration was strength and courage.
Welcome back. Still tuned into the market. Let's put the spotlight then on the CPI inflation print. And Lakshmi Iyer, the CEO, Kotak Investment Advisors, now joins in on the show to discuss that number and lots more. Thank you so much, Lakshmi, for taking time out. We didn't really think that we would be addressing, the high inflation print, but here we are at a 3-month high. What is your sense as to the number of 6.5%, and what were the estimates that you were working with?
Hi, good morning. So I think the market consensus was in and around the 6% range, with the most bullish number being at about 5.6%. So by any yardstick or any metric, clearly the number has come beyond the market comfort, largely obviously aided by vegetables and of course cereal prices. Now cereal prices have seen an uptick. It remains to be seen if we are going to see some cooling off effect. So therefore not really getting carried away by just one print, but certainly it is an eye-popping number and should have some sort of a market reaction today.
What could be that market reaction, Lakshmi, and does that change estimates materially with respect to the repo rate hike going forward? Because 25 basis point was expected to be the last one in this cycle. Does that change that assumption?
Well, yes and no, not completely changing it, because there are a couple of things which we need to keep in mind. IIP, which is, a slightly lag measure, which one tracks from a market standpoint, has been slowing down. We saw that number also, number one. Number two is today it's very critical to see the US inflation number, which also is showing a receding sort of a trend line. And we've not really seen too much of an uptick. In fact, US yields were about 3.7 yesterday. So given all that, it doesn't seem to be a given that there is going to be a rate hike in April. Too soon to call it. I would still say it's a toss of a coin. But I would say today markets could react a tad negative because the mood is a little bit somber. So maybe about 4 to 5 basis points kind of a gap up opening could be pretty possible.
So Lakshmi, what's the outlook then on the laser focus that we have on the US CPI? What is it that we could expect on that front?
So if you see last month, the inflation clearly came down in the US. Again, Powell made a statement a few days back that US inflation is clearly headed on the lower side. And markets don't seem to be, you saw the equity markets were up in the US. You saw the bond yields were fairly okay at about 3.75, closed at around 3.7%. So markets are not really expecting anything ominous outside in the US this evening. So if that comes pretty much in line with expectation, I think markets should kind of settle in. Either which ways looks like we are towards the fag end of the rate hike cycle in India. It's a matter of 25 basis points now or go for an extended pause.
Okay, let's see whether that nervousness is out of the picture or not today evening once that CPI data in the US also comes out. But as you pointed out, perhaps in India at least, we are at the fag end of the upcycle as well. Thank you, Lakshmi, for joining us today. But shifting focus back to earnings, we had the numbers coming in from Nykaa as well as there was the con call as well from where we got the key highlights. Vinny is joining in to talk to us about what the internals were when it comes to Nykaa's Q3 performance.
So when you talk about Nykaa's Q3 performance, overall it was a bit of a mixed bag, and you could see a slight bit of a miss coming in there because yes, growth was on course. We saw revenue growth coming in, but the company has highlighted, and actually what we saw coming in was a miss in margins, and the company has highlighted that they have seen a bit of down trading coming in both in the BPC as well as the margin segment as well. BPC is the beauty and personal care segment, which saw an inline growth in terms of revenue, but gross margin saw a contraction coming in over there. Fashion segment also saw a growth coming in of around 49% on a year-on-year basis and 21% on a quarter-on-quarter basis. But the gross merchandise value, that was one factor that we were keeping an eye out on. Even in terms of the con call highlights, they said that gross margins mainly were impacted due to the seasonality as well as down trading. Nykaa Fashion, they said, has seen a gain coming in the market share. Medium-term target for EBITDA break-even is what they're keeping on the fashion segment, and long-term target mainly because they'll make a cost structure also similar for the fashion business as well. And what the company is highlighting in their con call is that Q4 ideally cannot see a significant growth over Q3 given the seasonality. So we could expect that Q3 maybe will be at similar levels of Q4 will be at similar levels of Q3 as well. Now in terms of the brokerage notes, what we're seeing coming in, BofA is maintaining a buy, but they've cut their target price to 200 rupees per share from previous rating of 240 rupees per share. It was a miss for them on all fronts for Nykaa's numbers. Goldman Sachs maintaining a neutral rating. They too have cut their target price to 200 rupees, and previously the target price was 233 rupees per share. Similarly, Nuvama also is cutting their target price to 195 rupees. Previous target price was 251 rupees. So surely brokerages are not too happy with Q3 numbers coming in from Nykaa.
All right, we'll be watching out for this stock closely in trade today. Moving right on then, let's focus in on Zee Entertainment as well, that came out with its numbers post-market hours. Now, the company has delivered a mammoth a drop in net profit, pardon me. This is by 91% to 24 crore rupees versus 299 crores. And that is largely on the back of exceptional expense due to the revenue provision from Citi, the impairment of NCDs to Zealearn, as well as merger-related costs and the provision for DSRA. Revenues have come in absolutely flat at 2,111 crore rupees. And you have the management as well in their conference call highlighting a lot of concerns. They said that the ad revenue growth is going to remain under pressure in the near term. They also believe that maybe we could see a recovery, but that will be in future quarters. The performance in the South was also offset by weak Marathi traction as well as a dip in Hindi movies. The OTT competition, that will continue to remain high, and their viewership share as well on a sequential basis has fallen to 16.2% versus 16.4% last quarter. But they will continue to invest in ZEE5. They will be in an investment zone for the next few years, and maybe we could see a recovery in the ad revenue, but that is going to be only down the line. So Zee Entertainment could understandably come under pressure in today's trading session. Citi's got a buy rating though. They slashed the target to 280 from 300 rupees, saying it's been a muted performance that continued in Q3. Near-term market uncertainties clearly have hit estimates, and the ad revenue market continues to remain under pressure. There is an earnings reduction by about 11 to 15% for FY24 to 25.
Okay, so that's about Zee Entertainment. Sharp cuts coming in as far as the brokerage estimates are concerned, specifically from Citi, wherein for FY23 they have cut the estimate by almost 35% and 10 to 15% for the coming years. But one stock which was in focus yesterday was clearly InfoEdge. That took a beating of almost 10%. That after the street was a tad bit surprised by the impairment that they have taken for one of the investments, because other than that, the numbers were largely in line with expectations. Yes, there has been a bit of a moderation when it comes to the billings as well. We have with us Mr. Chintan Thakkar, the whole-time director and group CFO, joining us to talk to us about the prospect going forward. Chintan, hi, good morning. Thank you so much for making time and speaking with us. First up, let's talk about this entire impairment itself, right, that you have taken for one of your businesses. Could you talk to us about what went wrong here versus your own estimates, and have you written off the full value already, or could there be further write-offs that could be possible in the coming quarters?
So when we started the investment, obviously the opportunities seemed, very lucrative. There was an audacious vision, and we thought that there's a good customer insight on the base of which the founders were starting this new venture. So we backed them, and we backed them across multiple rounds. Overall, we have invested 276 crore, and recently we have also given a loan of about 12 crore. So we have already written off 276 crore. And we are hoping that the entrepreneurs would be able to bounce back and make something out of this. But right now, certainly the situation, particularly from the liquidity standpoint, because of high cash burn in their business and money stuck in a lot of money stuck in receivables, working capital, and given the environment for funding. We think that it's a tough situation to be in, and we have always been following very conservative and good corporate governance. So we thought if there is a bad news in the offing, shareholders should know it first. So that's how we have kind of written it off and already announced it.
Do you expect any recovery? Because we appreciate the fact that you've taken a complete write down ahead. So do you expect any recovery, and if the recovery happens, will that be added back to the bottom line?
Yeah, well, it's possible. I'm not saying that it's impossible, but obviously they are in tough situation. So it's a very delicate situation right now. It all depends on next few weeks how they are able to restructure, or if they are able to get new round of funding. Then maybe I think, as I said, that the idea was great, but it's just the cash burn was too high.
Okay. Given that things in the startup space have been slightly topsy-turvy, will InfoEdge be going easy in making any future investments as well? While you've tasted success in Zomato and Policy Bazaar, but post that, frankly, it's looking tough.
Well, I think it depends. We have gone through these cycles of ups and downs. And we have been investing it since now more than a decade. So I think we have gone through these cycles. There are always some good opportunities also when the cycles are down. We do have a good amount of cash balance with us, so there could be opportunities as well. But having said that, we are on caution, and particularly we have always been on the side of profitable growth. So our advice to all the startup founders is that growth at any cost is not the right strategy. And of course, this era of infinite funds available in the market, I think that era is also gone by. So they have to adjust to the new reality, and so our investment management team also, and make the decisions accordingly.
Chintan, when the going looks great, nobody is looking at businesses which are loss-making. But it's only when the tide turns, you tend to look at all the businesses with the magnifying glass. And this is something which we've spoken about in our previous interaction as well. Jeevan Sathi and 99acre, you've not managed to scale them up. And a lot has changed in those businesses as well. So logically, what sense does it make for InfoEdge to continue invested in those businesses, because those businesses are loss-making?
Yeah. So I'll tell you, I think one needs to have a closer look at what the P&L looks like, right? And if you look at last quarter itself, the revenue growth is, I think, in the range of around close to 40% revenue growth. The billing growth is about 15% in 99acres. I think real estate has gone through a kind of a 7, 8, 10 years kind of a cycle where it was kind of sluggish for a variety of reasons. And when it was always coming up, there was always some bad news, whether it's demonetization or GST or RERA or the NBFC issues. So I think the real estate cycle has been for a long kind of subdued. But we are seeing last 2, 3, 4 quarters, if you see it, I think it's on the up. It's on the rise. And the potential of this business to grow is huge. I think we are just scratching the surface. About 80-90% of our revenue comes only from 8-9 cities, and most of India is yet to be built. Right? If you really kind of slice and dice on our P&L, you'll realize that if you look at the investment that happens in the brand, and the promotion, which is little ahead of the revenue. If you take that out, there is an inherent margin even as on this date, right? So if the idea is to get to profitability, we can, But these are internet businesses, these are winner takes all. So you need to keep pushing the pedal when it comes to the growth, right? And if, particularly when you are seeing some green shoots, we would continue to invest a bit more in terms of the advertisement and promotion, and that would kind of have some impact on the P&L. But I think one of the ways to look at is that what is the total investment, the loss that I understand the point, but the loss that right from day one till today, if you really see it, how much loss we would have made, it would be something in the range of, and I'm talking about all the losses in last 12 years plus capex and all that, would be like $50 million. You can't build a good internet property in that type of money, So I think we have been extremely capital efficient. We have been extremely, kind of aware of, what kind of, investment that we make. And we are very cautious in our approach.
Okay, fair enough. I just wanted to understand an outlook on your margins as well, given that they have risen to 39.1%. Your marketing spends as well were optimized. What is going to be a sustainable level that you think your margins could be at?
Yeah, look, I think if you look at last, many quarters, we would be in that type of range, right? And particularly the largest business that we have is kind of, is the margin seems to be kind of inching up a little bit, So probably that positive trend, is something which we think that we can sustain. Also, the good part of recruitment business is that we have a natural hedge. The large part of our cost component is people cost, right? And if people cost is moving up, it also means that the market is very hot, and that also has a positive impact on the recruitment business. So we seem to be having a kind of a natural hedge when it comes to the recruitment business, and that's like 75%, 80% of our businesses, right? So we do enjoy that that benefit.
Before we let you go, a quick word a bit about your recruitment business itself, which is Naukri. So are you seeing a bit of a slowdown, and the lag impact of the slowdown in IT hirings is expected to come? Because right now as well, there's a bit of a moderation in your billings.
Yeah, no, I think moderation is probably a right word. We are certainly, when it comes to IT-enabled services, we are seeing a kind of a slowdown. But that's kind of well compensated by the growth in the non-tech sectors, right? And which is, in some way, it's a good, news for our platform, because it just shows that our platform is very neutral and it's just not kind of only for IT. Right? Even within IT, there are certain pockets which are growing very well, right? For example, captive seems to be doing much better than, let's say, the IT services company, right? And what we have also seen historically is that whenever the US goes through certain kind of a recessionary trend, particularly on the tech side, the captive units in India are doing much better, because the more and more companies are looking at India as a destination for captive units. So that may not be in a quarter or 2 quarters, but in the long range, it seems to be a good opportunity for us, all the captives coming. And what I have really understood is that it's just not about the captives in IT, software engineering, but it's also in general, in engineering or in the financial market. I've heard about captives even in the agriculture sector coming out in India, right? So I think hopefully the captives will do much better in the quarters to come.
Sure. And Chintan, just before I let you go, you talked about the impairment that you have taken in one of the businesses. Any other business in the portfolio that you're watching out for, which could result in a bit of a impairment?
Well, we are watching all the investments that we have, and if I have to really include the AIF that we have through which we are making investment, we would have a portfolio of more than 50 companies, right? So we have been watching, every investment that we do. As I said, that we'll continue to follow very conservative principles when it comes to if there are any bad news, in the offing, we would always follow a conservative view on that. Having said that, we really don't foresee, anything immediately.
All right, Chintan. I think somebody is trying to reach you, so really appreciate. Early morning, Chintan, you start getting.
I have to take his call.
Early mornings, 9:30 you start. 8:30 you start. I thought television guys are the only guys who start early in the morning.
We are in the same boat. Thank you so much.
All right, appreciate your time. I'm just going to mark the SGX as well. And what do we have on SGX? SGX is indicating that we are in for a flat start. Aren't we tired of using the word flat, range bound? It's dull, it's boring, but it's not weak. I mean, that's how I look at the market. Nishal Mishwari, good morning. Thank you for joining us. It's getting hard. If it was hard, it's getting harder to predict the market, because we are just stuck in this range from last 8 weeks now. So how would you describe the market, Nishal, without using the word range bound?
Morning, Nikunj. But I have been actually for a couple of months now been negatively biased, and I continue to remain negatively biased in the market. I still believe basically both in the US, which has been the main driver of the world markets, basically there is some way to go on the downside, and similarly in India. So I believe when the recession hits in the US, which is likely to happen in the third quarter of the calendar year, that's the time basically you are going to see the bottom of the market happening. And that is what we will see in the US, and simultaneously we'll see it in India also. And last 40-year history has shown every time recession hits, basically markets correct, and there are deep corrections, and all world markets follow. So that is what my bias is in the current year towards the negative side.
Nishal, so what is out of jail card then? When do you think bulls will come out of the jail? What will be that trigger?
So I think the trigger would be basically pivoting in the US, pivoting of the interest rates, which I believe at least a couple of more 25 basis point hikes are there, and thereafter it's going to be a bit of a pause. So when Fed starts cutting interest rates in the US, that's when I believe basically bulls are going to start coming out of their wherever they're hiding for the moment.
Nuresh, you're looking rather serious to me today. It's okay in a range, Nuresh. It's okay.
So can't help it. I'm not.
Are you missed sending your wife Valentine flowers? What happened? There has to be something reason why you're looking so serious in the morning.
Distracted, and the markets are not doing much, so you end up just reading stuff.
Okay. Nishal, I'd like to draw your attention to a couple of stocks. Info Edge, just 10% decline. City Union Bank, 10% decline. Big selling in Lupin. Do you track any of the three names I mentioned? Because all of them were, in a sense, casualty of bad news yesterday.
So we track all of them actually, and I think Info Edge, as I was hearing Chintan just now, I think this is a fallout of I think VC funding, and I do not really worry about that because their investments are in a lot more companies, and they have a reasonable history to show that they understand what they are doing. And I think a couple of them, their investments are unicorns today, and even on the listed side, I think people find value in them. So I think Info Edge is clearly on the right path. No worries around there. There will be a couple of quarters here and there, but I think they are on the right track. Worried about Lupin. I think this is now becoming endemic there. Basically, every quarter there is some or the other issue actually in Lupin, and there are profit warnings. There are top line issues. So I'm worried about Lupin. As far as CUBK is concerned, totally out of the blue. Never expected this kind of a write-off, basically, and this has been advised by the auditor. So needs to look at it basically whether this is the last quarter of kitchen sinking or more will come. I have always seen basically when cockroaches appear, basically there are many more. So I would be cautious on CUBK at the moment.
Those were the casualties of yesterday, Nishal, but the casualties of today could very well be Z Entertainment as well as Campus Activewear, right? Both of these counters have reported disappointing set of numbers. Did you get a chance to look at either of those? What should one do regarding these counters?
So yeah, both of them I have looked at it basically. I think Campus still some way to go. So the problem is happening. We have been highlighting this at the bottom of the pyramid, basically where Campus and Relaxo kind of companies are there. There, the inflation has taken a big hit basically on the incomes of the people, and inflation still continues to be very, very potent because yesterday you saw CPI is once again up, and this is now up almost, I think, highest in the last 12 months. So I think this is the major cause of worry basically because this was the segment basically which it was catering to. So I believe till inflation comes off, I do not see any respite out there. As far as which was the other company you spoke about? Z. So Z also, I think once again the same thing. I think last quarter could have been one-off. where the advertisement revenues have fallen so dramatically, because most of the FMCG companies didn't see much growth coming or much recovery happening on the rural side, and that's why they have cut their advertisement so aggressively. But going ahead, I see Z to be in a better spot, given that the merger will come through, and definitely there is value basically if you see a merged entity.
Nuresh, when he hears that, he starts looking here and there. Nuresh, it's a stock which has disappointed everybody.
Absolutely. So, say there was a time the stock did really well, and it was around the same prices before this whole announcement. Say the whole takeover came, the stock used to be at 180 rupees roughly. The stock went to 350 plus post the merger, and we are back to the same place where we started off from. So the worst part is if you look at Z, the lows in say March 20 were around 120, but whole of 2020 the stock price was 180 to 200, 220 levels. So it's almost like 2.5 years wasted. So out here, the only savior is the fact that you have a stop loss and you get out. But for now, we are back to the same places. So I don't think we have a lot of downside below the 200 mark, where is the big gap up which happened on the announcement. The same was the low in whole of 2020 to 2023. But the upside seems very difficult going forward.
Let's hear out some top fundamental stock calls. And Sandeep Sabharwal, well, he is bullish on Mayur Uniquoters. Let's listen in.
Yeah, I think one stock where I bought initially something and then we have increased our allocations lately is a company called Mayur Uniquoters. So they essentially are into PU, PVC products. So they were big in footwear, then they became big in the artificial leather seat covers for cars, etc. So the stock is at the same level at which it used to be 7-8 years back, because of issues related to profitability, slowdown, etc. post-COVID. Now they've got large orders from global MNCs, which will start getting executed from next year onwards. So next 2-3 years, we'll see very strong growth. And valuation-wise, I find it reasonable. So it's moved up lately. So so people can take the call accordingly.
All right, let's put the spotlight on aviation. It's been nothing but crowded airports, jam-packed flights, and of course exorbitant rates. But the October to December quarter really has been a boon for Vistara. It was the first time since the beginning in 2015 that the airline actually posted operational profits. And my colleague Sameer Dikshit caught up with Vinod Kannan, who is the CEO at Vistara, to understand their business, the revival in travel and tourism. Let's listen in.
The last year was phenomenal for us. I think the demand has come back in a strong way. The fact that Vistara as a brand has also grown in stature, thanks to the support from our customers and our shareholders and everyone else. I think that kind of shows in the numbers. Both the load factors as well as the average fare. Of course, October, December is the strongest quarter, but they have been very positive. And the revenue side has what has driven us to give this good result.
You think so? The momentum will continue for the next quarter as well? And if not so, what factors could actually hamper it?
No, I think the demand still remains strong. Even if you look at the reports which are released by the ministry, load factors have remained in the high 80s to 90% load factor. So I think demand is strong. It's still going well. Of course, seasonality is important because the peak of October to December may not be repeated in this particular quarter. But having said that, the other aspect which we are seeing is that costs are slowly going up as well because US dollar is strengthening. Of course, it goes up and down, but today we are almost 10% weaker Indian rupee compared to what it was 1 year ago. Plus, there is also a cost escalation because of inflation, because of everything that's happening in the world, because of the war. So these are all concerns for us. But fundamentally, I think demand in India will remain strong, and we are very hopeful at least for the next 6 months.
Okay, I'm just going to, shift gears and go back to technology. Technology has been a bravo of a sector this year. Just when everybody thought that, technology is going to be taking a backseat, it's going to be a multi-year down cycle for technology, the US economy is going to flatter and the stocks in a sense will start crumbling. IT in this calendar year as an index has been the better performing index. Let's compare that. The Bank Nifty and the IT index. 2023 beginning, the consensus view was stay with banks, avoid IT. What is the trend so far this year? Not a very powerful trend, but IT index is up 5%. The Bank Nifty, which is a combination of actually large banks, namely two banks, ICICI Bank and HDFC Bank and SBI. The Bank Nifty in this calendar year has given returns which are negative. 3% down for the Bank Nifty, 5% up for the IT index, and Nifty in this year has remained absolutely flat. Nishal, sometimes the crowded trades, they get challenged. The crowded trade of 2022 was long IT, avoid banks. That reversed. The crowded trade of 2023 beginning was avoid IT, stay with banks. And that is also reversing.
I agree. I think obviously I think over ownership and under ownership has played a big role there. And if you really look at it, the maximum amount of selling which has come from the FIs during this year, and I think they were large owners of banks, and they have been continuously selling, and that prompted even the domestics to sell off. And as the outlook became more murky for the current year, people started trying to identify areas where they could hide comfortably. And IT was a best spot to be. The stocks had corrected dramatically, basically, whether you look at Infosys, TCS, the large caps had corrected. So I think it was really well positioned at the beginning of the year, and I think funds are increasing their positions.
The kind of reaction initial we saw to, for instance, to a City Union Bank or a Balkrishna Industries, which no doubt were disappointing numbers, was perhaps a little overdone?
So I think this is, as I was saying, the outlook has been negative in the market for now almost 1.5 to 2 months. And so market is totally unforgiving. You show just a bit of some slippage and market is very, very hammer and tongs basically after you. So this is a part to do with is basically that you are at very, very highly positioned also in terms of valuation, and there is no scope for any mistake. One mistake and the people are just looking to sell off. So I think the outlook remains to be weak and uncertain, and that's why people are just saying that finding reasons to cash out. So that's what I see the trend. I don't see that just one quarter of bad results warrants this kind of punishment for these stocks. But unfortunately, market is unforgiving in an unforgiving mood at the moment.
Jay Tucker, good morning. Thank you for joining us. What are your trading ideas? Which way you think one should focus on?
Hi, very good morning to you, Nikunj. Nikunj, I would say that markets are pretty sideways, and hence we are continuously seeing this stock specific movement. And my trading bet today would be on TVS Motors. I mean, see, overall, auto has been doing good, and TVS, as far as the two-wheeler space is concerned, has done really good. It's just that we saw some good correction happening in this, a decent correction which has happened technically in a falling channel. And the stock has reversed from the lower end, and the momentum has turned positive out here again. It has still not provided a breakout, Nikunj, I would say, from this falling channel, but then I'm preempting that the wave 4 on the daily weekly chart seems to have got over. Hence, one can buy TVS Motors targeting 1100 to 1130 for the short term, placing a stop loss at 1030.
Take as well as to some of the stocks that managed to buck the general trend yesterday. And Naresh, wanted to get in your view then on the charts as to what the outlook is on an Oil India, and even you had something like Glenmark that spiked up about 5% plus.
So I think both were result reactions. So Oil India has been slowly and steadily making a up move over the last few months. The stock had corrected over in June, July. Post that it has been making higher tops and higher bottoms. Yesterday's volumes were also good. Say it was almost 4x the general volumes. The recent swing high which it made was closer to 244, 242 levels. Yesterday it came very close to it. So clearly the momentum is strong here So out here expecting this to continue towards 260, 270 levels. So positive on Oil India. Glenmark is something I would be a little cautious on, given the fact that the stock has been sideways only over the last 6-8 months, and the longer term trend still remains weak. The stock had made a peak at 680 in the whole COVID Fabi flu boom. Post that, the stock has only been in a downtrend. So for now, it's in a tight range of 380 to 450. Till the time it doesn't break out of this range, I would not take a trade here.
Okay, so that's the take coming in as far as some of these names are concerned, but we'll also have a couple of these pharma companies that will be in focus today as well, right, Nishchal? So the numbers from Medanta or Global Health were quite impressive, a revenue growth which was around 18%, margins have been maintained, you have the occupancy levels going up, and even for Krishna Diagnostics, while the margins have slipped, but the top line growth has been strong. If I had to ask you your top bet within the pharma space, what would it be? Would it be hospitals, diagnostic, or the CDMO plays, etc.?
So I think we are going back to saying that pharma is the one basically. So within the healthcare, pharma is what we are now betting again. Because we have started seeing some recovery in the US market. I think margin seems to be stabilizing. Companies who are focused onto the specialized front, basically, they have started doing well. So among the three, I think at the moment we are seeing pharma as a sector. And there, I think their Sun remains to be a top pick.
I'm just going to shift focus and talk about a stock I think we are discussing on a daily basis. And I think I'm going to get a yes even before I speak the name from both our experts. Actually, all three in this case. Tata Motors. Nishchal, Jay, Nuresh. Who feels that Tata Motor will not create wealth? Raise your hand. Nishchal feels it will create wealth. Nuresh has been telling me Jay Thakkar it feels. But the problem is in last 5 years, Nuresh, the stock has not created wealth. Every time we discuss that Tata Motor will create wealth, it does not create wealth. Do you think this time it's different?
So if you look at Tata Motors, it goes through the cycles. Say 2003 to 5, it did really well, went up almost say 5x, 7x. Then it was on the verge of a total bankruptcy almost, which is what people called it. And the stock went from, say, sub 50 levels back to 600. Then we were back to 300 in 2016 itself, then back to 600. And then we came very close to the 50 to 80 mark in 2020. And from that point, it has gone up 10x. So the good part in the current fall is it has not taken such a sharp dip. So every time the stock has made a cyclical peak, it has generally fallen 50-70%. And this time around, we've seen a correction from 530 to say 380. So relatively a lower correction. That's your first indication the trends are changing and the longer term charts are improving. So if you look at the longer term charts, that 550, 600 is a major problem. And now in the short term, 460 is the last swing high. So technically it has gone through a 12 to 18 months of sideways consolidation. And eventually the stock could actually break out. So would be very positive on the stock with a longer term view, but would wait for price action to confirm a shorter term entry. But the first time the correction has been lower over the last 15 years. Otherwise, the stock has generally taken a very, very sharp dip.
Have actually been some of the stocks that have managed to gain, at least in the last 1 year. Interestingly, something like a UCO Bank features on that list. It's gained about 114%. And then there's been a CG Power that has done quite well. There's also from the defense space, no surprises to see something like a Hindustan Aeronautics, a lot of focus on this sector, although maybe the budget allocation to the defense sector was a bit lower than expected. And Cummins India actually as well has managed to gain in the last 1 year or so. Nishchal, I'm just wondering, within the entire manufacturing theme as a whole, just taking a look at the overall defense space as well, are there any interesting stocks that come to mind?
Yeah, definitely. I think this is one space basically which has done very well, and I continue to believe that we are seeing the first signs of even private capex coming in. And you look at the government's commitment, basically 10 lakh crores. I think this is a number which we have unheard of, basically. Putting almost 3.5% of the budget into capex. I think that's a very big and bold step by the government. So I'm very positive on the whole outlook as far as the manufacturing and infrastructure space is concerned. Our top picks, and even in case defense also. And now, yesterday, I think Prime Minister has announced that defense export is what he's going to focus on as a government, and they are targeting, I think, 5 billion worth of exports by some date, 2025 or 2030. I think some number is there. So I think these are all very, very positive indicators. So government is totally supportive of the sector. What are our topics in this? So I think defense, we continue to remain positive on HAL. And in the private space, we like solar industries. These are our two topics as far as defense is concerned. On the capital goods side, our topics remains to be Triveni Turbine and Thermax in that sequence. And infrastructure, our topic remains to be in the large caps, Larsen, and then PNC Infra in the mid caps. So the whole sector we like a lot actually.
Okay, so quite a few bets coming in from the entire capital goods and manufacturing theme. But let's go across to our chartists to understand what are their top bets when it comes to the mid-cap space today. Naresh, you go first.
So maintain a bullish stance on L&T Finance holdings with a medium-term view. The stock is setting up for a breakout over the last 2-year range of 95 to 98 on the upper end. This has been tested almost 3 times over the last 4 months, and also was the top in April 22, back in June, August, September of 2021. So a big breakout is in the making out here. So a good time to accumulate the stock would keep a stop loss at 88, a minimum target price of 110 to start with.
L&T Finance has been on the radar of our chartists for a while now. Let's see when it hits that 110 rupee mark. But let's go across to our other chartists to find out what's their topic. Jay Gold, what are you looking at when it comes to the entire mid-cap space?
Sure, I have 2 buy recommendations, and both are the one which have really been beaten down quite a lot. And now finally the stocks prices seems to be reversing from the lower end after forming a decent base, after confirming the high tops, high bottom, and also a good reversal in its momentum indicators on the daily, weekly charts with a positive divergence. And these setups generally provide a good amount of bounce back, and the probability of the bounce back is higher. So I'm betting on these 2 setups. The first buy recommendation is on Intellect. One can buy this, targeting around 479 to 498 in the short term, and one can place a stop loss at 433. And second buy recommendation is on Asahi India. This stock, along with the other setups or the parameters which I just discussed, has also formed a good base symmetrical triangular pattern from which it is likely to provide a breakout, since the momentum is well in the favor of the bulls. So Asahi India can be bought for a target of 538 and 559. These are his 2 short-term targets. One can buy this placing a stop loss at 490.
Okay, there you have it. Those are some interesting recommendations that our chartists are picking out. Lots of mid-cap ideas. But what's the khabar on Dalal Street then? We understand that mutual funds have changed their positioning in the Adani Group stocks in January. Ambuja Cements and Adani Enterprises actually saw the most selling, while Adani Ports and ACC have seen the most buying. Let's get in more details then, and my colleague Somit joins in with that perspective. And Somit, walk us through the latest mutual fund positions in Adani Group stocks.
Well, if you see across the 9 Adani Group companies, apart from Ambuja and Adani Enterprises, all the other Adani Group companies have seen actually a good amount of buying coming in from mutual funds, and this could be on the back of the correction that we had seen in the stocks. Now, for Ambuja specifically, if you see, 18 mutual funds have sold or paired their stake, and only 1 mutual fund has completely exited from the counter. And in the month of January, there were 12 mutual funds who have added more shares in Ambuja. Well, in case of Adani Enterprises, if you see, 4 mutual funds have completely exited from the counter, while 15 mutual funds have trimmed their stake in Adani Enterprises in the month of Jan, and only 12 of them have added or bought more shares in Adani Enterprises in the month of January. However, for ACC, if you see, 18 mutual funds have added more shares in the company. In case of Adani Green, there were 16 mutual funds who have added stake in the company, while in case of Adani Ports, there were 23 mutual funds who have added shares in Adani Ports in the month of January. For companies like Adani Power, there were 3 mutual funds who have added stake in Adani Total, Adani Transmission and Adani Wilmar. If you see, around 6 to 16 mutual funds have actually gone ahead and bought shares in these companies, and this could be largely on the back of the correction that we had seen in Adani Group stocks. To sum it up, apart from Ambuja and Adani Enterprises, Enterprises, all other Adani Group companies have seen good amount of buying coming in from mutual funds in the month of January.
Thanks very much, Somit, for putting those details into perspective. Here are some other top headlines outside the world of business, and the death toll from the earthquakes that have hit Turkey and Syria has now crossed 36,000. Tens of thousands of people have been injured in the earthquake, and only a handful of survivors have actually been pulled out from the rubble. This is more than a week after the disasters. Officials have said that this is the worst natural disaster to hit the region in a century. Meantime, Ford Motor has announced that it will collaborate with a Chinese supplier in a new $3.5 billion battery plant for electric vehicles in Michigan, despite tensions between US and China. The automaker will own the new facility through a wholly owned subsidiary, and that plant is expected to open in 2026 and employ about 2,500 people. Meantime, you've got German automotive manufacturer Audi that has unveiled the Audi Q3 Sportback SUV in India, and the price tag? 51.43 lakhs for the Q3 Sportback technology model. This is actually the company's first compact coupe crossover in the segment.
Meantime, the world-famous Pangong Tso Lake in Ladakh is going to host the first ever frozen lake marathon on February 20th, which is at an altitude of 13,000 feet. The 21-kilometer marathon is India's first of its kind. India's star cricketer Smriti Mandhana draws the highest bid in the women's IPL auction at Rs 3.4 crore from Royal Challengers Bangalore. Almost 60 crore rupees was splurged on 87 players. The 5 franchises went out on a shopping spree, shelling out big bucks for domestic and international stars at the first ever WPL auction. The inaugural edition of the WPL is stated to be played between March 4th and 26th in Mumbai. A total of 22 matches will be played in the tournament.
The government is very keen to push the new tax regime. Is there anecdotal data which the government has which indicates that if you take the exemptions out of the total tax system, it will stop revenue leakage?
Are you trying to close all the exemptions given? No. Those exemptions will last as long as people have availed of it, as long as there are people availing of it. But it's also in the interest of all of us to have the new regime, which has been, in the sense, simplified and with reasonable tax rates, has been a recommendation of very many committees. So the new regime will have to be made attractive enough for people to move there.
Dishal, give me a sense of what your new recent additions have been to the portfolios and to your clients in this year.
So I think last year and a half, 3 or 4 stocks which we have been recommending. I think we bet big on basically India opening up and tourism becoming a big space. So we had this luggage company Safari, which we initiated recently, and it has done very well. We have been recommending for the last 6 months. Indigo was another one basically which we have been pushing. Then I was talking about solar earlier. That has been another one. Triveni Turbine. So I'm saying these have been the stocks which we have been pushing with our clients.
Okay. Jay, give me an idea, maybe for not today, tomorrow, but more like in positional idea, which is a deep stop loss, but you're happy to keep that trade for next 2 to 3 months, where you're happy to roll over even if it's an FNO.
Then, Nikunj, I would say, there's a good breakout coming in Bharat Forge. I mean, this stock was consolidating since a couple of trading sessions, and finally it did provide a breakout in yesterday's trading session with a good amount of volumes. Although we saw some profit booking at the higher levels, but the kind of consolidation, Nikunj, we have seen since a couple of trading sessions, and after that, this kind of a breakout has come. So I think that Bharat from here on is a good positional long side bet. And the risk reward is also very much in favor of the bulls. The stock closed at around the levels of 890. I'm talking about the spot levels. And on the lower side, one can place a stop loss at 868. The targets, however, are quite on the higher side, I would say, because the range was of around 830 to almost 900 on the upside. So it's a 70 points range breakout. So the target would somewhere around be 950, 960 on the upside, and the stop loss would be 868. So here the risk reward is also absolutely favorable. So Bharat Forge would be my positional bet.
Nishal, we'd like to thank you and for taking time out and joining in today on the show. Let's move right on and find out what the top index calls are from our chartists this morning. And here it is. Here's the index call. A whole recommendation that seems to be the consensus from both Kush as well as Naresh Mirani. Remember, Naresh was talking about the 17,600 mark. As long as we'll sustain above that, we are likely to remain in a pretty tight range, and that seems to be pretty much the course of action today as we're stepping into trade. It's looking like a tempered session. And ditto when it comes to the Nifty Bank Index this morning, Naresh and Kush saying a whole recommendation on the Nifty Bank Index, hovering around those levels of about 41,800 on the Nifty Bank Index.
Okay, the Nifty for now is suggesting that it's going to be a better start than what SGX Nifty was suggesting at 17,840. And in stock-specific action, it seems that Nykaa in pre-open is showing that it's going to trickle down by around 5%. Plus, the Adani group of companies, whether Transmission or Wilmar or Green, they are suggesting an open with a downtick of around 5%. You also have Z Entertainment, which is expected to react negatively to its earnings. What can stand out today is perhaps Ratnamani Metals, because as we are flagging out, that stock has reported a very good top line, and GR Infrastructure as well as Godrej Industries are some of the other counters that you need to watch on the upside. But Naresh, wanted your sense, if we do open with a bit of a cut on Nykaa as well as Z Entertainment, what would you do with these counters?
So basically nothing to be done. Z continues to be in a downtrend. It came very close to a recent swing high. So till the time it doesn't cross 230, not really interested. Nykaa is something which is still far away from making a bottom. It needs more of a consolidation to go with. We've seen Zomato spend 6 to 8 months making a bottoming out formation and still struggling to go back above the recent swing highs of 65-75. So Zomato has just made the first initial recovery of 15-20% from the lows, but needs to spend Nykaa needs to spend a lot more time. So overall, the whole new age pack has a lot more time to go before the trends change.
Have to go as we brace ourselves for the market open this morning. Do remember, in terms of the kind of cues that we got or the global handover, that was fairly decent from the US markets, even the futures, little change. The inflation data, the CPI print, that's going to closely be watched out for. Asian markets, yes, maybe a little bit mixed in terms of Hong Kong and the Shanghai markets this morning, and the SGX Nifty as well, indicating a bit of a muted start. Of course, what's going to be on the minds of the market will be the inflation print to a certain extent, but won't really move the needle. We have a lot of numbers as well that the street will be reacting to. Highlights coming in from the likes of Nykaa, Z Entertainment as well, the likes of Apollo Hospitals, Aisha, all will very closely be watched, Nikunj, in today's trading session. And then, of course, that Adani capital infusion as we step into trade. And, of course, it's Valentine's Day, but I don't think there's any love on the screen this morning.
Well, the long-term love stays, which is be
the
bull
fact
on
that we
India.
haven't even brought it up so far, and we're almost at 9 a.m. means I don't think anyone's doing anything special
No,
today.
love for India, it stays. So that's the long-term love, which I guess is there in everyone's heart. But 30 seconds to go. Nothing large in terms of a big cue, so to speak. On Monday, the breadth was poor. On Tuesday, will it improve? Rupees at 82.59. We are not taking notice of that. The bond market reaction to the inflation data would be crucial and would be important. Frankly, nobody was expecting a print above 6%, and the inflation print is way above 6%. If the US CPI data and US inflation data is not that encouraging, then we could be in bit of a issue for equity markets. There you go, 10-year paper is not that high. So from 7.36 to 7.4, which means markets are not really, frankly, worried about the spike in the inflation data, and they don't expect that the borrowing in the near term will get challenged anytime soon. First rates will just start coming up on your screen. I'm going to load it up by looking at my Bloomberg screen as well, and there you go. Okay. First rates, Nifty 52 points higher. For the Sensex, it's again a flat start with no particular bias. Mid-cap indices and small-cap indices are again off to a okay start. Let's look at some newsmakers here, and the newsmaker in a sense was Info Edge yesterday. The newsmaker today would again be Grasim and iShare ahead of numbers, so Info Edge has stabilized. Z Entertainment reacting to numbers 215. It's such a beaten down stock that nobody owns it now, frankly, so the earnings impact would not be there. Nykaa, bit of a yes and no there, but Nykaa I think has been on the receiving end, especially after the fiasco which was created when the bonus shares and the anchor share and that whole issue caused a lot of heartburn for long-term investors. But the breadth today I think is looking perfect. That is something which is really worth mentioning. Banks are off to a good start. Remember, banks were on the receiving end last time, yesterday. So State Bank of India is off to a great start. SBI is off to ICICI Bank is off to a good start, and even HDFC Bank is off to a great start. So do these banks, are they turning around? And if they turn around, we could be in for a decent day of trade. But for the moment, it's a flat start with a positive bias.
Okay, let's find out some of the other newsmakers then in today's trading session. It's been a disappointing number when it comes for something like a Z Entertainment that we highlighted. You've also got something like a PFC, which is in the spotlight, and that's largely on the back of the asset quality improving. Ratna Money Metals, another result reaction. A quick check-in on that stock, as you've seen the margins as well improve. There's been an IRB infra. The total toll collections have risen about 33% on year. Linde India as well, has been a margin improvement. Castrol, another result reaction. And you've got a Polyplex as well that has been in the spotlight on the back of numbers. All cargo logistics as well, margins have slipped. Jindal Worldwide, it's been a disappointing number. Sri Renuka Sugars as well, watch out for that candidate in trade. It's going to be in the spotlight on the back of its numbers, down in today's trading session. Krishna Diagnostics as well, the overall business, core business, has declined about 3.8% on a Q-on-Q basis, and that stock as well down in trade. Global Health, another one that's put out a disappointing set of numbers. Coforge as well in the spotlight. Do remember, barring PE, selling about 9.8% stake at a price of about 4,050 rupees per share. That stock quoting higher by about 0.5%. And there's GSPL as well, that's in the news on the back of its numbers. But clearly seeing a hammering on the back of earnings when it comes to all cargo. That's a double-digit gash that you're witnessing in the stock. Let's get in those first trades going then from our market experts. And